Welcome to Rise to Wealth. Here, I share quality knowledge through storytelling. If you enjoy the content, don't forget to like, comment, and subscribe to the channel. Now, enjoy the video. Jason was always a meticulous and organized guy, the kind who keeps a spreadsheet of every monthly expense. For him, managing finances was more than a necessity. It was a way to feel in control, even if the results weren't always as satisfying as he'd like. Working at a tech company with a stable salary, Jason managed to pay his bills and save a little, but he still felt like something was missing. Deep down, he wanted more than just stability. He wanted the security and freedom of knowing that his money was really working for him. He often heard colleagues talking about investments, some even buying cryptocurrencies, which intrigued him. Jason knew a bit about traditional finance, but had never ventured into crypto. Too volatile, he thought. He'd always been a bit hesitant to invest in something that could crash overnight. One day, during a lunch break, a coworker started sharing stories about his own investments and mentioned a new, somewhat less risky option in the crypto world: cryptocurrency ETFs. Jason listened as his coworker explained how this type of investment allowed people to benefit from the growth of the crypto market without having to buy and store the coins themselves. Instead, he could invest in a fund that managed and diversified the assets automatically, spreading out the risk. This idea immediately grabbed Jason's attention. He had always wanted a way to invest in something promising without relying on pure luck. With crypto ETFs, his coworker explained, Jason could have a stake in a basket of cryptocurrencies without worrying about buying each one individually and risking it all at once. For someone like him, who was cautious and liked knowing where every cent went, ETFs offered the best of both worlds: the growth potential of the crypto market, but with the security of a diversified portfolio. Curious, Jason spent the entire afternoon researching crypto ETFs. He discovered that these funds worked similarly to traditional ETFs, which invest in stocks, but instead of being made up of publicly traded companies, they consisted of crypto assets, and in some cases, companies directly involved in the blockchain sector. He was especially interested in two specific ETFs: the BITO ETF, which tracks the performance of Bitcoin futures, and the BLOK ETF, which invests in companies working with blockchain and digital assets. These ETFs felt like a safer way to enter the world of cryptocurrencies, something he had never considered before. Jason was excited, but he wanted to understand how crypto ETFs could truly impact his finances. That night, he started watching videos, reading articles, and diving into every detail of these investments. He joined investor forums and talked to a few people who were already investing in crypto ETFs. What he liked most was the idea that by investing in an ETF like BITO, he could get exposure to Bitcoin's performance in a more predictable way without having to buy the coin itself. And with BLOK, he could diversify even more by investing in companies at the forefront of blockchain technology. With less volatility than pure cryptocurrencies, over the following days, Jason continued to think about the possibility of investing. He made a list of questions, challenged himself to understand every technical aspect, and finally made his decision. This wouldn't be an impulsive investment, but rather a calculated strategy based on data. Jason decided he was ready to take a new financial step and enter the world of crypto ETFs. If you want to know how he crafted a strategy to earn money safely with crypto ETFs, keep watching. This plan could change the way you invest. With the decision made, Jason knew he needed a solid strategy to get the most out of crypto ETFs without exposing himself to unnecessary risks. He didn't want to invest randomly. He wanted to understand every step, from choosing the ETFs to reinvesting his profits. So, he put together a careful plan to make his investment as efficient and profitable as possible. Define initial investment and monthly contributions. Jason decided to start with an initial investment of $5,000. For him, this amount was significant enough to generate interesting returns, but wouldn't compromise other areas of his financial life. Additionally, he committed to adding $500 every month as an additional contribution. These monthly contributions would help his principal grow steadily, allowing him to gradually increase his market exposure, select the right ETFs for his portfolio. After weeks of research, Jason decided to split his initial investment equally between two ETFs, the BITO ETF and the BLOK ETF. The BITO ETF was focused on the performance of Bitcoin futures, allowing him to capture Bitcoin's price fluctuations without needing to buy the coin directly. This ETF was ideal for Jason, as it provided exposure to the best known and most valuable asset in the cryptocurrency market. On the other hand, the BLOK ETF had a different approach, investing not directly in cryptocurrencies, but in blockchain and tech companies supporting the sector. With BLOK, Jason would be betting on companies developing blockchain solutions, like software and digital security firms. He saw this choice as a safe anchor for his portfolio, since many of these companies had strong foundations and were growing steadily. Set a review and adjustment frequency for the portfolio to ensure his investments stayed aligned with market conditions. Jason established a monthly review system. Each month, he would assess the ETF's performance and determine whether it made sense to increase or decrease his position in either one. This review allowed him to take advantage of high moments to make adjustments, avoiding significant losses during downturns. Jason knew the cryptocurrency market was volatile, so his strategy was to keep his portfolio under control without drastic changes, reinvest profits to grow wealth. Jason knew that to see significant growth in his wealth, he would need to reinvest the profits earned. So he created a clear rule. All income generated from his crypto ETFs would be reinvested, increasing his principal and amplifying his gains. He believed in the power of compound interest and knew that, over time, reinvesting profits could accelerate his financial growth. To keep this practice sustainable, Jason set aside a percentage of profits each month and reallocated those funds into new ETFs or strengthened existing ones. Follow relevant crypto market news and events to maximize gains and reduce risks. Jason adopted an essential habit: keeping up with news and events in the crypto and blockchain market. He noticed that many of the ETF's movements were directly tied to regulatory announcements, new technology developments, and strategic partnerships in the blockchain sector. Jason set aside some time each week to stay updated on the market, allowing him to make portfolio adjustments before market changes affected his investments. This included adding more to the BITO ETF during Bitcoin uptrends or strengthening BLOK when new tech companies joined the fund. Maintain discipline and avoid impulsive decisions. Jason knew that one of the biggest challenges in any investment was staying disciplined and avoiding impulsive decisions. So he decided from the beginning to stick to his plan and not let fear or greed interfere with his strategy. He would only review his portfolio on preset dates without obsessing over daily market fluctuations. Additionally, he set aside a small part of his budget for emergencies, avoiding the temptation to withdraw invested money during uncertain times. With all these steps in place, Jason was ready to put his strategy into action. He knew he'd need patience to see the results, but he trusted that, over time, this structured and disciplined approach would bring him significant gains. Want to know how this strategy impacted Jason's finances? Stay until the end of the video to discover how he started earning consistently with crypto ETFs. After months of discipline and following his step-by-step strategy, Jason started seeing real results from his crypto ETF investment. At first, his profits were modest but steady. In his first month, the BITO ETF, linked to Bitcoin's performance, yielded 7%, while the BLOK ETF grew about 5%. These initial returns were a pleasant surprise, especially considering he was just starting. With his initial $5,000 investment split equally between the two ETFs, Jason earned approximately $600 in his first month. Thrilled with the results, Jason implemented his reinvestment strategy as planned. He took the $600 and added it to his portfolio, along with the $500 he had committed to investing monthly. This quick reinvestment boosted his principal, creating a snowball effect where his profits generated even more profits each month. As the months passed, Jason noticed his returns growing exponentially. By the third month, the combined performance of his ETFs brought in over $1,200 in a single month. He realized that by adding new funds and reinvesting profits, his investment base was strengthening, and the magic of compound interest was beginning to take effect. By the fifth month, his returns reached $1,800 monthly, exceeding any initial expectations. This continuous growth gave Jason a sense of security he had never felt before. He knew his plan was working, and with discipline, he could achieve even greater gains. By the end of the first year, his initial $5,000 investment had multiplied, totaling over $30,000. Jason was now generating about $3,000 in monthly profits, a figure that began to transform his financial life. But where exactly was all this money coming from? Each month, Jason profited from the appreciation of the ETFs and dividends generated by some of the companies in the BLOK ETF, which paid returns to investors based on the blockchain sector's profits. Additionally, the BITO ETF, tracking Bitcoin, directly benefited from cryptocurrency price surges. When Bitcoin rose, BITO's value increased proportionally, allowing Jason to expand his stake. During crypto market upswings, such as those where Bitcoin appreciated by more than 10%, the BITO ETF reached growth peaks that significantly boosted Jason's total returns. Meanwhile, the BLOK ETF, even in bear markets, maintained relative stability since it included more established companies. This provided Jason's portfolio with extra protection, ensuring he wasn't as affected by the market's sharpest fluctuations. With $3,000 in monthly profit and a consistent reinvestment strategy, Jason began exploring new possibilities. He used a portion of his gains to diversify, investing in ETFs focused on emerging technologies and sustainability, while keeping the majority in crypto ETFs. This new portfolio left him in a position where his investments practically doubled every 6 months. Incredible, right? If you're enjoying this story and want to learn how to maximize your profits with crypto ETFs, don't forget to subscribe and turn on notifications so you won't miss our upcoming videos. Today, Jason looks back and sees the real impact of this journey on his life. He not only achieved extra income, but also gained a level of financial security he'd never imagined possible. His routine changed. He still closely monitors the market, but without the stress and worries he had before. Jason continues to review his portfolio monthly, making adjustments as needed and seeking new growth opportunities. But most importantly, he feels he's found a reliable method to grow his wealth. With the income from crypto ETFs, Jason finally managed to fulfill some of his dreams. He started planning that international trip he'd always wanted, made upgrades to his home, and even began thinking about a more comfortable retirement. For him, the best part of all this was that financial success came not from luck, but from discipline and a well-executed strategy. Now, he shares his story with friends and family, encouraging them to seek out alternative investments and to never underestimate the power of financial planning. And as Jason likes to say at the end of every conversation about investing, the secret to financial success is having a strategy, staying disciplined, and never stopping learning.